Nvidia is about to become the first trillion-dollar chipmaker after surging $200 billion in valuation in a single day and arguably reaching bubble territory. In fact, Nvidia is now more than 6 times the size of Intel, even though Intel still generates more than 2 times Nvidia's annual revenue. So the surge in Nvidia's stock, which has been the best performing stock of all S&P companies this year, has been nothing short of spectacular. The most recent price action also shows that the AI boom is starting to look like a stock bubble, which refers to a situation in financial markets where the prices of stocks become significantly overvalued and simply detached from reality and their intrinsic and fundamental value. Stock bubbles are characterized by a rapid and often unsustainable increase in stock prices, often driven by excessive speculation and investor optimism, until eventually the enthusiasm reaches a point where it is unsustainable and stock prices experience massive declines. We have witnessed numerous instances of such stock prices bubbles in the past few decades, from the dot-com bubble, during which tech stocks that were burning money traded at insane valuations, to the cannabis stock price bubble in 2020 and early 2021, driven by the anticipation of federal legalization and the potential for significant profits for cannabis companies that were not yet profitable. And of course, also one needs to mention the meme stock bubble during the height of the COVID pandemic, which resulted in astronomical gains for fundamentally weak companies like GameStop, AMC and Bed Bath & Beyond, which by now is actually bankrupt. Now in 2023, it seems like the rise of artificial intelligence and the hype surrounding ChatGPT and this new technology shows some bubble-like characteristics as well, as some companies only need to mention the term AI in one of their press releases, and subsequently their stocks will jump 20, 30 or even 40%. And some people claim that Nvidia stock is now trading at a price that is completely detached from reality as well. Nvidia is worth close to $1 trillion and now worth more than Berkshire Hathaway, Meta Platforms or Visa, so companies with much larger revenues. So in this video, we'll take a closer look at the more recent developments at Nvidia, discuss Nvidia's market opportunity and outline which expectations are priced into the stock. Okay, so if we just take a look at Nvidia's stock chart, we can see that over the course of the last 9 months, the stock has more than tripled. If you've been invested in Nvidia stock for more than 5 years, you've even enjoyed the return of a so-called 10-bagger, so a stock that has 10x your initial investment, and you can extend the time horizon even further to 10 years, and Nvidia has basically been the best performing stock in the S&P 500 since 2013, compounding at a rate north of 50% annually, as the user long equity highlighted on Twitter. Now, last week, Nvidia reported its financial results for the first quarter of 2023, and revenue came in at $7.19 billion, down 13% year over year and up 19% quarter over quarter. Earnings per share for the quarter was 82 cents, up 28% from a year ago and up 44% from the previous quarter. And quite frankly, those year-over-year numbers weren't really impressive, with revenue declining year over year. But what caught investors' attention was the company's guidance for the next quarter, which was massively above analysts' expectations. Management guided for $11 billion in revenue, which would be a new record high revenue and would represent a 64% year-over-year increase. And as a result, the stock popped. Nvidia added $220 billion in market cap in just 1 hour after reporting their results. And by comparison, here's the total market capitalization of Nvidia's competitors. AMD is worth $175 billion, Intel's market cap is $120 billion, and Micron is worth $73 billion. So essentially, Nvidia just added more in market capitalization in 1 hour than the entire value of Intel and Micron combined, making it one of the 10 most valuable companies in the world. But of course, Nvidia is an attractive business. In their most recent quarter, Nvidia achieved gross margins of 67%, an operating income margin of 32%, and an even more impressive free cash flow margin of 37%. Those margins absolutely rival the margins of other highly competitively advantaged companies like Salesforce or Apple, indicating that at least as of now, Nvidia seems to have a lot of pricing power. Now, based on the recent stock performance, let's take a look at Nvidia's current valuation. Based on the most recent financial results, the California tech company trades at a very demanding enterprise value to revenue multiple of 37, an enterprise value to operating income multiple of 212, and a market capitalization to next 12 month free cash flow multiple of 49. And as you can see, Nvidia is trading at historically high valuations, and we will now consider whether this valuation is justified and can still lead to attractive returns for investors. So what does the company actually do? Well, the company provides graphics and compute and networking solutions. And to quote from their most recent annual report, Nvidia pioneered accelerated computing to help solve the most challenging computational problems. Since our original focus on PC graphics, we have expanded to several other large and important computationally intensive fields. Fueled by the sustained demand for exceptional 3D graphics and the scale of the gaming market, Nvidia has leveraged its GPU architecture to create platforms for scientific computing, artificial intelligence or AI, data science, autonomous vehicles or AV, robotics, metaverse, and 3D internet applications. I would argue that Nvidia is best known for its GeForce graphics processing units for gaming and PCs, or in short, GPUs. But they also design system-on-chip units, application programming interfaces, and software. And in the context of this video, we also need to stress that they are considered the global leader in artificial intelligence hardware and software, as GPUs also well suited for the data processing and model training demands of generative AI. And just about everything in their most recent press release and earnings is about artificial intelligence. For example, they reported a 14% increase in data center revenue, which can be largely attributed to the increased AI demand. By now, I think it is well known that the user count of applications like ChatGPT is rapidly increasing. In just a few months, the user count of the ChatGPT chatbot has exceeded 100 million users. Microsoft has now integrated it into their solutions, and Google's most recent I/O event showed that Google is also investing heavily in this space.
As you may have heard, AI is having a very busy year.
So all these AI companies need to purchase more graphics card to meet the growing user demand. And of course, the market opportunity is huge. To quote Nvidia CEO Jensen Huang, the world has $1 trillion of data centers installed, and it used to be 100% CPUs. In the next 5 to 10 years, most of that $1 trillion will be largely Gen AI. Statista expects the revenue of artificial intelligence chips to compound at a rate of 42% annually, from $15 billion in 2022 to $128 billion in 2028. Other market researchers even predict that the AI chip market will reach a size of around $309 billion by 2030. Nvidia bulls would argue that besides the hardware opportunity, there is opportunity in the software space, as Nvidia can leverage its position in hardware to capture profits in software. Just to give you one example here, Mercedes expects to generate $2 billion from car subscription services by 2025, and Mercedes has a partnership with Nvidia, which includes a 50-50 split of profits. So, does all of this mean that investing in Nvidia represents a lucrative investment opportunity? Well, quite frankly, I don't think so. Because to invest successfully, you have to be very conscious of the price that you pay. And in investing, one should always consider both the best case outcome but also the worst case scenario. And let me just quickly outline what could go wrong when buying Nvidia stock at today's price. As we have shown, Nvidia currently trades at an enterprise value to revenue multiple of 37. That's an incredibly rich valuation. Sure, right now everything looks rosy, they have a clear head start in the AI space, the market opportunity, as we have just shown, is absolutely huge. They generate impressive margins and guide for significant growth. But can you predict with a high degree of certainty that all of this will still be the case 10 years from now? How big will the market for AI chips actually be? How big will Nvidia's market share be? To be honest, I don't think you need much imagination to come up with a scenario in which Nvidia's business and competitive position looks much worse than it looks today. And what would this mean for the multiple Nvidia is trading at? Well, of course it will go down, and if the business will ever hit a rough patch and the narrative about the company changes, well, then the multiple might actually collapse. There are plenty of examples of stocks that have followed exactly this trajectory. Roku, for example, went from 27 times sales to 2.3 times sales. Shopify at its peak valuation traded for more than 50 times its annual revenue before experiencing an 84% stock price decline. Both Microsoft and Apple are now Wall Street's darlings, but both businesses were at some point in the past trading below 5 times their operating income. And I think it is those incredibly low starting valuations that allowed investors to enjoy the impressive compounded returns in the subsequent years. So I wonder, what are the odds that at some point in the near or distant future, Nvidia will trade at a multiple of less than 5 times its annual revenue? I would argue the chances are actually quite high. Jim Cramer the other day said,
"Best of all, there is absolutely zero competition. None! I've never seen anything like it. It's a monopoly by genius."
Which in and itself may be a counter-indicator. I would argue that Nvidia will inevitably have to face competition in the AI space, and as a result, the high profit advantage will diminish, which in turn will crush both the valuation multiple and profits at the same time, creating a major headwind that is very tough to overcome. I think the Nvidia AI hype is grossly overinflated. And without getting too much into the competitive environment, I think over the long term there will be very serious competition from Google, AMD, Intel, IBM, Apple, Alibaba, and even Meta. Yes, you heard that right. After Apple, Amazon, Google, and Microsoft, Meta now also builds its own AI chips, as Meta recently introduced the first in-house silicon chip designed for AI workloads called MTIA.
By having it in-house, we are able to optimize every single nanometer of the chip.
The fundamental target in designing this MTIA is to provide highest performance in the lowest power. And in the process, we achieved twice the efficiencies compared to today's GPUs.
So 10 years down the line, Nvidia might not be as clear of a leader as they are right now. Considering that AI is a future technology, what is preventing other semiconductor companies and big tech players from doing exactly the same? How strong and durable is Nvidia's moat actually? That's quite literally the trillion-dollar question here. So again, let me know in the comments down below, wherein does the moat of Nvidia actually lie? Yes, Nvidia is in the lead right now, but at close to 40 times sales. It will have to stay there for many decades to justify the current valuation. So let me show you what would happen if we enter a different phase of the AI hype cycle and if Nvidia ever trades at a lower revenue multiple again. If over the next 10 years, Nvidia's enterprise value to sales multiple would decline from 37 to 5 times revenue, that's a headwind of 18.14% compounded annually. This in turn means that even if Nvidia can 10x its revenue over the next 10 years, which represents a 25.9% CAGR, investors would only end up with a 3% compound return, and that's your return before paying capital gains taxes and before considering inflation. Alright, and that's it for this video. Make sure to watch one of my other videos to support the channel. Take care.